Real estate, a multi-cost and very smart, the single form that locks your property tax in place permanently. 91% of seniors over 65 have never submitted it. There is one form accessible in most counties throughout the United States that will cap your property tax bill at its present level indefinitely, no matter how significantly your home's market value climbs from this moment forward. Your county assessor's office holds this form. It has been around for years in the majority of states, and 91% of seniors who meet the requirements have never submitted it, are not presently benefiting from it, and are spending hundreds or even thousands of dollars more in property taxes each and every year for no other reason than the fact that no one ever informed them the form existed. This is not a loophole. This is not a grey area. This is a program written directly into state legislation specifically for homeowners who have reached the age of 65. And the county government responsible for running it has a direct financial reason to never pick up the phone and tell you that you are eligible. Every dollar of property tax relief you receive is one less dollar of revenue flowing into their budget. So they process the bills of seniors who remain unaware and wait for the small number who do know. The average senior who qualifies for this program and is not currently enrolled is overpaying their property taxes by somewhere between $1,400 and $3,200 each and every year. Stretched across a decade of retirement, that amounts to between $14,000 and $32,000, walking out of your account when it never needed to. One form, submitted one time. That is the only thing standing between you and that money remaining exactly where it belongs. If you are watching this for the very first time, hit subscribe right now and turn on the notification bell. Professor Kyle Pomamello covers IRS regulations, property tax programs, and financial protections that the government will never voluntarily send you a letter to explain. Hit like if you want more seniors to find this video before their next tax bill arrives. And drop a comment below letting me know which state you are in, because these programs differ by location, and I want to know which ones matter most to the people watching this channel. Before I walk you through how this works, I need to address two assumptions that are going to make certain viewers click away right now, and both of those assumptions are incorrect. The first group is the senior living on a fixed income. Social Security, maybe a modest pension, nothing elaborate. They believe this program is aimed at people with high-value homes in expensive markets, not at the person whose house is worth $180,000 in a mid-sized city. That thinking is wrong. Property tax freezes are determined by your age, not your home's value. A $180,000 home with a frozen tax bill saves you just as much proportionally as a $600,000 property. The program was created specifically because fixed-income seniors are hit hardest by rising property taxes on a home they have owned for decades. The second group is the comfortable retiree with a paid-off house that has tripled in value. They assume this program is income-tested and designed only for people who are struggling. In many states, that assumption is also wrong. The age-based property tax freeze in numerous states carries absolutely no income restriction. You qualify based solely on your age, not your income, not your net worth, your age alone. I am going to address both groups on every point in this video. Nobody watching should be able to say at the end that this program was not meant for them. So why have 91% of eligible seniors never filed this form? The answer is simple and identical every time. Your county assessor's office does not reach out to seniors when they turn 65 to explain what they now qualify for. They do not send a letter. They do not include a notice with your annual tax bill. The program exists. It is funded. It is waiting. And the office responsible for running it is the very same office that collects your property tax revenue. Every senior who claims the freeze is one whose tax bill stops growing. Every senior who does not claim it keeps paying the full amount year after year as values rise. This is not malice. This is incentive. County governments rely on property tax revenue to fund their operations. A senior who has no knowledge of the freeze program contributes more revenue than one who does. There is no financial motivation for the county to actively educate you about a benefit that lowers what you pay them. And here is what makes this especially urgent heading into 2026. Property values across most of the United States have risen sharply over the past 4 years. In many markets, assessed values are being revised right now to reflect those gains, which means property tax bills for seniors who have not applied for a freeze are about to climb considerably. Filing now before your county processes updated assessments locks in the lower figure. Waiting until after locks in the higher one. My name is Professor Kyle Pomamello. I have spent decades analysing federal and state tax policy and the specific programs within those systems designed to protect seniors who built their lives under a completely different economic environment than the one that exists today. The situation I encounter most often is not the senior who made a financial mistake. It is the senior who purchased their home in 1987 for $95,000, watched it grow to $420,000 over 35 years, and is now receiving a property tax bill 4 times what it was when they first moved in, on a fixed income that has not quadrupled alongside it. They are rich in equity but constrained in cash. They did everything right. They bought a home, paid it off, and stayed. And the reward for staying is a rising tax bill that the law specifically created a mechanism to stop. Point 1. The 3 types of senior property tax relief. The single biggest reason eligible seniors never claim relief is that they assume it is a welfare program built for people in hardship, not for them. That picture is accurate for one of the 3 types. It is inaccurate for the other 2. And the type with no income limit is the one most comfortable retirees have never heard of. Type 1 is the income-based circuit breaker. This program is designed for lower-income seniors. When your property tax burden exceeds a certain percentage of your income, the excess is reduced, deferred, or eliminated. Every state sets different income thresholds, but the concept is consistent. If taxes are consuming too large a share of your fixed income, the state intervenes. Type 2 is the flat senior exemption. This removes a fixed dollar amount from your home's assessed value before the tax rate is applied. If your home is assessed at $300,000 and your state offers a $50,000 exemption, you are taxed on $250,000 instead. This reduces your bill but does not freeze it, meaning your bill can still rise as your assessed value climbs just from a lower starting point. Type 3 is the age-based assessment freeze. This is the program 91% of eligible seniors have never filed for. Once you reach the qualifying age, 65 in most states, though some use 62 or 67, and you submit the application, your property's assessed value is locked at its current level for tax purposes. Your home can appreciate by $200,000, and your assessed value does not move. In Texas, the freeze covers school district property taxes, which represent the largest share of most homeowners' total tax bill. Multiple other states offer similar programs covering all or most of the calculation. For the lower-income senior, the circuit breaker was created for your situation. But do not stop there. Many lower-income seniors also qualify for the age-based freeze, meaning both programs can be combined. Claim the circuit breaker for current relief and file for the freeze to prevent future growth. For the comfortable retiree who assume they do not qualify, the age-based freeze was written specifically for you. No income test, no asset test, no means testing of any kind in states that offer this version. You qualify because you are 65 and you own your home. One action right now: search your state name alongside the phrase Senior Property Tax Freeze or Senior Homestead Exemption. Look for language saying age-based or no income limit. Write down the program name, qualifying age, and application deadline. Then call your county assessor's office to confirm the details before acting on anything found online. Point 2. How the age-based freeze actually works. The most common misconception is that the freeze means your tax bill can never increase under any circumstances. That is not entirely accurate. The freeze locks your property's assessed value, not your tax rate. Property tax bills are calculated by multiplying assessed value by the rate set by your local government. If the assessed value is frozen but the rate increases, your bill can still go up. It simply cannot rise because your home appreciated. The freeze eliminates appreciation-driven increases but does not protect against rate hikes voted on by local government. In practical terms, a senior in a stable rate environment with a frozen assessment will see their bill hold essentially flat for years. A senior in a jurisdiction that regularly raises its rate may see modest increases even with a frozen assessment. Either way, the freeze removes the largest driver of rising property taxes for most seniors. There is also a portability consideration. In most states, the freeze is tied to the specific property on which you filed. If you sell and purchase a new home, you typically need to refile on the new property. Some states allow a one-time transfer of the frozen value to a replacement property of equal or lesser value, but this is the exception and requires a separate application. For the lower-income senior, the practical impact is that your tax bill stops tracking your home's appreciation. If your home was assessed at $180,000 when you filed and is now worth $280,000, your tax is still calculated on $180,000. That $100,000 gain generates zero additional tax obligation. For a senior on a fixed income, this can be the difference between remaining in their home and being priced out of it. For the comfortable retiree, the freeze shields a larger absolute dollar amount. A home that climbed from $380,000 to $620,000 over a decade produces $240,000 of assessable appreciation. At a 1.5% effective rate, that represents $3,600 per year in taxes you are not paying because you filed one form. One action right now. When you call your county assessor's office, ask whether the freeze covers all property taxes or only certain components. Ask whether it transfers if you move. Ask what happens if you add your children to the deed. These 3 questions give you a complete picture before you file anything. Point 3. The filing deadline and the mistake that costs seniors their protection. The most painful version of this situation is the senior who found out about the freeze, intended to file, and missed the deadline. They assumed the program would be available whenever they got around to it. They waited until tax season. They missed the county's window by 2 weeks, paid the full tax bill for another entire year, and in some cases lost protection for the year new assessments were processed, all because of a deadline they never knew existed. Property tax exemption applications are governed by county-level deadlines that vary by state. In most jurisdictions, the deadline falls between January 1st and April 30th of the tax year for which you want protection. Some counties use May 1st or June 1st. A small number allow late applications with a reduced benefit for the current year and full benefit the following year. Miss the deadline and you typically wait until the next application window opens. The deadline is not printed on your tax bill. It is not included in any annual communication from your county. It is only available on the assessor's website or by calling directly, and only if you know to ask. For the lower income senior, missing the deadline means paying the full bill for another year when every dollar matters. More importantly, if your county is updating assessments this year, missing the deadline before those updates are finalised means the freeze locks in the new higher value rather than the pre-appreciation figure. Filing before versus after the assessment update can represent thousands of dollars in permanent tax difference. For the comfortable retiree, every year without the freeze is a year rising assessments are building into your permanent baseline. Filing 5 years after becoming eligible means 5 years of appreciation are baked into the frozen value. The earlier you file, the lower the locked-in value and the greater your protection over time. One action right now. Call your county assessor's office today and ask one question. What is the deadline this year to file for the senior property tax freeze or senior homestead exemption? Write the date down. Set a calendar reminder 2 weeks before it. Then ask them to mail you the application or direct you to the online form. The deadline is the most important piece of information in this entire video. Bringing it all together. Your county government knows you are eligible for the property tax freeze. The form is in their system. The program is funded. The protection is waiting. They are not going to call you. They are not going to send a letter. They are not going to include a notice with your tax bill. The system is built so that money stays in county revenue unless you file the form and claim what the law already says is yours. Being eligible and actually having your taxes frozen are 2 completely different things. The law does not automatically apply the protection when you turn 65. The county does not file on your behalf. You have to know the program exists, find the form, file it before the deadline, and confirm it was processed. That is the entire gap between the senior whose tax bill froze at 65 and the senior whose bill has been climbing ever since. These programs exist, they are real, they are funded, and they are systematically unclaimed by the very people they were designed to protect, not because of complexity, but because of silence. The county stays quiet. The tax preparer never mentions it. The financial advisor does not cover it, And so 91% of eligible seniors keep paying a bill that the law already said they did not have to pay in full. Not anymore. Before you close this video, do one thing. Share it with one person in your life who is over 65 and owns their home. A parent, a neighbour, a sibling, a friend. It does not matter whether their home is worth $150,000 or $750,000. It does not matter whether they are financially comfortable or stretching every month to make ends meet. If they own their home, they are over 65, and they have not filed for the property tax freeze in their county, they are almost certainly overpaying right now, every single year, for no reason other than the fact that nobody told them this program existed. One share of this video could put thousands of dollars back in their pocket. Not once, but every year for the rest of the time they live in that home. That is the kind of difference one conversation can make. That is what this channel was built to do. In the next video, I'm going to show you the Medicare surcharge being quietly added to the premiums of retirees who left the workforce in the past 3 years. Based on income they are no longer earning, and the one form that removes it, which the Social Security Administration will process in 30 days, that almost nobody files because almost nobody knows the surcharge can be appealed at all. I will see you there.